And have you ever wondered why Ethereum's price seems to be underperforming compared to Bitcoin's? And despite the gains that Bitcoin has made in 2024, Ethereum has struggled to keep up. But according to analysts at Glassnode, there may be brighter days ahead for Ethereum. It all comes down to something called weaker capital rotation. Data from Crypto Moon Markets Pro and TradingView shows that Ethereum's performance relative to Bitcoin has been lackluster over the past 2 years. This has resulted in a weaker ETH-BTC ratio, reaching a low of 0.04622 on May 1st, the lowest since April 2021. Glassnode suggests that Ethereum's underperformance can be attributed to a lag in speculative interest from what they call the short-term holder cohort. These are investors who acquired their coins within the last 155 days, often seen as an indicator of new investor demand. In contrast, Bitcoin has experienced a noticeable increase in speculative activity among short-term holders, leading up to its all-time highs in March. However, this increased activity has not been reflected in Ethereum's price, as it has yet to breach its previous all-time high. And Glassnode's on-chain data further reveals that while Bitcoin's short-term holder realized cap is nearly at the same level as the peak of the previous bull run, Ethereum's short-term holder realized capital is still less than half of the previous cycle levels. This suggests a lackluster inflow of new capital for Ethereum. This lack of new capital inflows is a reflection of Ethereum's underperformance relative to Bitcoin. The market is still in the early stages of a macro uptrend, and historically, the price performance of Ether has been closely linked to Bitcoin's price moves. After the fourth halving, Bitcoin experienced a sell-off, dropping 11% to a 2-month low of $56,500 on May 1st. Since then, Bitcoin's price has recovered, consolidating within a certain range. Ether also experienced a similar correction after the halving, with a 6% drop, which Glassnode notes as the worst post-halving performance ever. And despite these corrections, the overall macro uptrend seems to be resilient, with relatively shallow corrections compared to previous cycles. Glassnode's analysis using the net unrealized profit loss metric suggests that both Ether and BTC are still in the early stages of a macro uptrend. Interestingly, Glassnode found that capital inflows into Ethereum tend to lag behind those into Bitcoin. In the 2021 cycle, the peak influx of new capital into Bitcoin occurred 20 days before the peak influx into Ethereum. This year, the short-term holder realized cap for Bitcoin has peaked around the new all-time high, while the same metric for Ethereum has hardly moved higher. Overall, while the market action following the halving has been similar to previous cycles, there are several data points indicating that Ethereum has underperformed relative to Bitcoin. Capital flows and rotation between the two assets show that Bitcoin has received the majority of the inflows, likely driven by the introduction of U.S. spot ETFs. Speculation activity appears to be concentrated within Bitcoin, with limited spillover into Ethereum thus far. And now, here's a short joke for you. Why did the blockchain go to the art gallery? To see the cryptographs. And with that said, thanks for reading. And until next time.